following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. But you're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day, kicking into the fall in a big way. Let's make it a great week. To master love, you have to practice love. The art of relationship is a whole mastery, and the only way to reach mastery is with practice. To master a relationship is therefore about action. It's not about attaining knowledge. Market-wise, let's take a look at it out here. We have the Dow Industrials up 67. NASDAQ is flat. S&Ps are up 3.5. Gold contract down $14.50, trading at $13.10 an ounce. Silver down 51 cents, $17.19 an ounce. Platinum down $9.50 at $9.59 an ounce. Copper up a penny and a half at $2.96 a pound. Light sweet crude flat, $49.91 a barrel. Bonds, 10-year note down 7 ticks, 126.03. 30-year bond down 21 ticks, 154.12. King dollar down 18 ticks, trading 91.845. The euro's trading 119 to the U.S. dollar. The yen is at 111.5 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. I want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. What do you have? We get the bulls and the bears. They're fighting over the 2,500 mark, folks. So we get a high out here today of 25.06. You get a low of 24.97. We're at flat out exactly 2,500. What 2,500 is, too, by the way, folks, is just the high of Friday. That's what's going on there. That's the number to keep your eye on. It's pretty amazing that it just right across, 2500.00. And that's the battle. And it's just, if we go, let's go to the NASDAQ first, next rather. So the NASDAQ, folks, what happened just about, let's see here, let me get that. We do have charts there, but let me reset that for you. There you go. What the NASDAQ did, folks, is that the NASDAQ at, let's see, at 2 o'clock, NASDAQ just went from a price point of 6,010 down to 6,067. Fast, furious, all of the above. We'll see if it in fact, drags the S&P down. There's no doubt that what you have inside the NASDAQ is that on Friday, that was the composite that couldn't make it. You got over the high, closed the... Well, let me get the issues. You got over the high, closed underneath it, just didn't have it going. Today we tested that, and now you're going to have the test. You're going to have the test on lighter volume. If we stay where we are, bottom line, you're going to have a failure on price and volume. 59.74. That's where we're at right now. So that's right now 37 points off its high. The number to keep your eye on, this is going to be the important number, is 5995.770. And it's not like the NDX 100 can't go up 25 points in about a heartbeat, because if you look at Friday, what you're going to see on Friday is the bottom line is that thing just, let me pull it up for you, because as we came into the close, they goosed that, and they goosed it in an incredible way. Bottom line is that when it just gave it up in an incredible way. Yeah, so when we were coming into the close, Friday, well, actually it wasn't into the close, it was earlier. Yeah, we went from 59.67. Well, oh, this is interesting. So we went right down to where it started from, and we goosed up to 6,003 inside the NDX 100. We can take a look at the SPY, the SPY. What you have with the SPY is this SPY's trading at 249.56. We are up 36 cents right now, and we'll see if you can actually. This would have to get under basically the 248 area. So that's got a buck and a half to go down before that changes the complexion of the SPY, because we did have, you broke topside on the 11th, light volume, but bottom line, you broke topside. The NDX, the 3Qs, that's a different story. Actually, we just did the 3Qs. That's a different story. The IWM, the small caps, they caught a bid. They're coming off the highs now. The IWM has been as high as 143.80. Right now, you're at 143.40. Gold contract. What do we have with gold? Gold contract, folks. When we take a look at it, what you've had with the gold contract, we go back to the July 10th area. You were at $1,211. You went up to $1,362. Did exactly what it should have been doing. It broke out of the consolidation that had been for quite some time. And now what you have, you're coming back into the strength where it took off from. And I expect this contract here, you know, 1297 is actually game inside the contract on the way down. The bonds. Now, let's look at the bonds. And what we are going to have is this, is that you get the Fed meeting tomorrow and the next day. Bonds right now, this is anemic. So this is telling me that the bond market is going to go up. Now, I don't know if the bond market is going to go up because they're going to be so dovish, or, in fact, the market wants to go south, and in that particular case, money will flood back into bonds. So what we have out here is this. The 10-year note is down 6 ticks. You're at 126.04. We've done 700,000 contracts. That's about as anemic as you can get. This bond, 10-year bond, folks, likes to do 1.2, 1.3 million contracts. Excuse me, we're going into 1.465. So it's half the contract volume. So that's telling me the bonds are going to bounce out of here. If we take a look at the 30-year, the 30-year right now is trading at a price point of 154.13. This is also anemic volume, and I think the 30-year has already rejected the lower price. Let me just see this for a second. So that's 150. Yeah, it has. So we've done 159,000 contracts. You're coming into 280,000. It's rejected that price. We got to 154.04. We're at 154.13. A close inside 154.12 is saying, guess what? That's it with bonds. Bonds wants to go to higher price once again. Pretty wild. King dollar. What do we have with King dollar? King dollar right now trading up 132 ticks. Light volume. There's only 17,000 contracts. That's nothing, man, on the way up. That is nothing. Bottom line, we'll see whether it can get up. First swing point up here is the highs of last Thursday rather, which is the 92,420 area. I do expect we're going to see it up to that 93,840 area. That is the swing high from the 16th of August. You stay right there, folks. We'll be coming right back. Dow Industrials right now are up 66. NASDAQ is flat. S&Ps are up 3.5. We're going to be coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials are up 66. You get the NASDAQ flat. S&Ps are off 350. Let's go over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the first hour. Don't forget, you can listen to Steve every trading day right here at TFNN, 1 to 2 Eastern Standard Time. Right on your cell phone, you go to TFNN.com. You hit Tiger TV. You're going to get some great HD quality video. You can also test Steve's newsletter. It's Mastering Probability. You can test drive that 30 days absolutely free. The way you do that, go to TFNN, go to newsletters, go to trading newsletters. You can test drive Steve's newsletter 30 days absolutely free. Steve Rhodes, what's going on?
Hurricane Irma.
Yeah, you actually moved around quite a bit, man.
Yeah, and thanks for what folks need to know. You threw out a lifeline to me because as I was crisscrossing the state, there was that possibility of heading up towards Tampa. Yeah. So it was great. It was great that you could help me. Help me out. Should we have needed to have done that?
Absolutely.
But, the storm didn't miss any of us. So now we've got another one. So, Tom, I'm going up to a wedding in Nantucket.
I heard. Oh, my God.
So I'm supposed to leave Wednesday morning. Called JetBlue to see what the options were, and they said, we'll call back tomorrow.
Okay, so now where is it? North Carolina, right? Is that what
it's in Nantucket.
Nantucket, that's right. That's what you said. Oh, my God.
Yeah, exactly.
Yeah, you don't want to get trapped in Nantucket, man.
It'd be okay, but still.
I don't know.
Still.
I lived on the vineyard, man. You get something...
No, I know.
And they bring everything into islands, man. So
absolutely, no question about it.
So hopefully they will go somewhere else, man.
Yeah. Well, time will tell. But I thought that what I would do today, it kind of came up during the workshop, or not the workshop, during the radio show that I was doing, is talk about one of the indicators that I created. And what I'm first showing here on the screen for the folks that watch us on Tiger TV is my trading pyramid, so to speak. You know how we have kind of like a food pyramid?
Yeah.
In this case here, a trading pyramid, where if we take a look at the broad market, which is my bottom panel out here, the immediate thing that you and I always look for are support and resistance levels, so we can try to understand where price is headed to, what it needs to get through on either side of the trade. trade. And then there's 4 different, it's just kind of like a table. The market moves best both to the upside and downside when the 4 pillars of the table or the market all are indicating the same type of thing. And by 4 pillars, folks, I'm referring to supply, volume, which Tom teaches us. And there's a number of different tools and indicators that you can use to identify volume patterns. You've got volatility and liquidity out here. You can use Bollinger Bands, Keltner channels, things like that, standard deviations. You then have another pillar, momentum or speed, and you can use the stochastics, relative strength indicator out here. You've got the energy and angle. I love David White's power law vector indicator as part of the art of time in the trade. I mean, that's just the coolest tool to help you understand the energy, of what's going on. But you can use MACDs, parabolic SAR, things of that sort. So what I thought that we would do today is take a look at one primary momentum tool that I like to use, which is the relative strength indicator. Now, there are folks that use the stochastic as an example. And in this chart here, this happens to be a monthly chart for gold, the continuous contract. But what we can see is that at the bottom of the screen, the second panel is the relative strength indicator, and the panel down below that is the stochastic. And you can see that there's a correlation between these two that's about 85% of the time. So my recommendation to folks, and a lot of times when we take a look at our palette, our chart, sometimes we overpopulate them with tools. And so my suggestion to listeners out there is to just if you have both of these tools on your system, they are saying stochastics, just master one of them. And because of that high correlation out there. And one of the ones that I mastered is the relative strength indicator, which was taught to us by J. Wells Wilder back in 1978, his book New Concepts in Technical Trading. I always like to take what people have developed and see if I can find a way to make them better. And Einstein, he always said, hey, everything should be made as simple as possible, but not simpler than that. And that's where I created this Rhodes Momentum Indicator. And I like folks to think of this tool, this indicator, as really the EKG of the market. And for those folks that have gone and taken the EKG, you've seen them. You've seen where, the heart is going from, in essence, a lower threshold to an upper threshold. And inside the relative strength indicator, we typically look at that lower and upper threshold as the 70 or the 30 level. So those red horizontal lines on my screen out here. And it's just normal for the market to actually move back and forth between one of them. But if the market is running fast in either direction, to the upside or to the downside, I like to kind of refer to it as that fast-moving Usain Bolt market out here. And if you picture running, if you're a runner out there, your heart is never going to, during that time period that you're running, your heart's never going to make it to the bottom level of that EKG. It's never, because you're just too much energy. You're really moving that energy. So when we take a look at momentum out here, here's an example of the gold chart, the monthly chart out here, and my indicator draws these little either red or green boxes out here to help us understand momentum. So a red box is the upper threshold level of that EKG, of that relative strength indicator. Now, in this case, I'm not using the standard 14-period time frame to generate these signals. And as another example, like say, run into the upside. We'll take the QQQ ETF. So this looks at the longer term. Since March of 2009, we've only seen one lower threshold signal. That shows up as a green box on my chart out here. And this shows us just the momentum that is occurring inside of the Qs out here, the monthly chart. And last month, the month of August, we saw another one of those signals where it's just getting up to that continues to stay at that upper threshold level. Whereas if we look at the XLE as an example, and what this is showing us is during the selling or in the buying, when price is not able to make it up or down to the opposite side of that threshold lever, just how much energy there is in one direction or the other. In the case here of the XLE, all been to the downside, with the exception of right now today. Now, this is a weekly chart, and this weekly chart's not going to end until Friday. I don't know if it's going to give us this upper threshold, this red signal at the end of the week, but as we speak right now, it is. So we may be seeing a change in trend from a momentum standpoint inside of the XLE. Again, this is a weekly chart out here. But if I go back to gold, gold, Tom, we can see that off of this 2016 bottom out here, start to see these red signals. Even when you get this one green, that's just a normal retracement back down, and then you start to pick up with the red signals out here. Now, the beauty of gold, what people need to understand about gold is it made a really nice bottom in 2017 when it formed this Gartley. I've added another tool here. Added this nice little Gartley buy pattern. So from the standpoint that we're starting to pull back in gold right now, it may be generating, this is a daily chart here for gold. You can see coming off of the lows here in July, all red Rhodes momentum indicator signals. So this very well may be setting up that next buying opportunity in gold. And you combine that with what you're seeing in price and volume out here. The way that these green signals work is when one forms, when price takes out the high of that signal, that is a momentum indicator that you're ready to resume your move to the upside out here. So I like what gold is doing on the weekly basis with that Gartley buy. I certainly like the fact that we're generating one of these Rhodes momentum indicator signals to the downside. So voila, that's where we're at.
It's a beautiful thing. And folks, you can come over to our website at TFNN. Go to newsletters, go to trading newsletters. You'll see Mastering Probability right there. You can test drive Steve's newsletter. 30 days absolutely free. And, of course, don't forget, every trading day, 1 to 2 Eastern Standard Time right here at TFNN. Just go to TFNN on your cell phone. Hit Tiger TV. Steve, thanks so much. Have a great one. Have a safe one. And we're going to send that hurricane. Keep it out in the ocean.
You got it. No way, Jose.
Yeah, totally.
It's just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 71. You get the NASDAQ right now trading up 4. S&Ps are up 4 also. Bitcoin, let's go over to Bitcoin. This is going to get really intriguing watching this whole Bitcoin thing shake out. So Bitcoin, folks, in the matter of 2 days, is up 33%. After, this is actually even higher than when Jamie Dimon, bottom line, was doing a number on it. So Bitcoin traded down to a price point on Friday of $29.75. You're at 47. You're at 4,007 right now, and I suspect what this is pretty wild. That you had the aspect of Diamond, of course, is J.P. Morgan Chase coming out with it, and then all of a sudden the BIS, which is the Bank of International Settlements, came out and said that, listen, these central banks, you better start dealing with this Bitcoin because it is going to be a challenge to the banking system. So that in itself, that came out, and of course, that put a bid under Bitcoin. There's no two ways about it. Let's go into the NDX 100. We'll look at the strength versus the weakness. Strength inside the NDX 100. We are down, but the strength is the NetEase. NetEase is up 7.8%. NVIDIA is up 3.9%. Lam Research 2.4%. Taken away from it is Mattel is down 6.3%. You get Cerner Corporation off 3%, and you have Discovery Communications down 2.9%. Inside the Dow Industrials, the strength versus the weakness. The strength out here is Boeing. Let's see. Boeing is putting 29 positive points into the Dow. You have Goldman's putting 18. You have Caterpillar putting 15. J.P. Morgan's putting 9. Apple is taking away 9 points. You got Disney taking away 4. Let's go over and we take a look at Apple because, of course, Apple had a big announcement. Hasn't really been able to get much traction going since that particular point. We're still basically building cars to get into the gap below. The gap below on Apple is 150, folks. Last week, we had lows out here of Apple at 157. You had highs of 160. Right now, you're at 158.63. And what we did have out here is that you had another fight inside the phone suppliers. Sprint came out this morning with a nice little offer. So Sprint Corporation came out with the most aggressive offer yet on the Apple iPhone price, and by offering a free phone with the trade-in challenging its larger peers to follow suit or face subscriber losses with bargain hunting customers. Starting today, new and existing Sprint customers can get an iPhone 8 if they trade in an iPhone 7, a Samsung Galaxy S8, or a Samsung Note. People with older iPhones or recent models of Samsung, Motorola, Google, or LG can qualify for a half-price phone of the i8, according to the Sprint statement. Nothing about the F10s. Is it S10? Well, it's the Apple 10. Yeah, the iPhone 10. That's what it would be. Let's take a look at some of the higher volume stocks out here. Well, actually, let's first go to a couple dogs out here. You get Chipotle. Chipotle's down $11. That's trading at $301. This equity here has just been having a hard time. It's down from $499 4 months ago. Pretty amazing. Now what it is doing, folks, it is hammering its swing low. Now, if this is going to be an ABC down, get out of the way, because let me put this on a weekly, because this is one monster ABC structure. Yeah, well, it's already, this is pretty amazing, actually, this stock. So the last level that I gave you, that's down from May of this year. Chipotle is actually down from $758. I see what's going on. It is a monster ABC down. Okay, so let's see what this is. I might as well put this on a monthly then. Yeah, you get a monster ABC down. Wow. Okay, so your A point is 758. This is pretty intense, man. 758. Here, we'll get this one exact because I got it on a monthly. 758.61. You got your B point out here is trading at a price point. Let's see, let's get this thing. 758.61. Your B point is, let's see, 352.96. Okay, so that's a 405, oh my God, $405 and 65 cents A to B. Your C point is, oh man, this is sick. If we gotta mark this one down because 499.00. That gives you. This is a monthly ABC down, folks, and this has a price projection of $93.35. It broke the B point, ripped it apart with volume. Your B point on the monthly, you get 28 million, took it apart with 42 million. Let me see where 93 is. Oh, that's going to be easy to get to, actually. Yeah, 93 is from where we are, it's not a big deal. That is pretty intense, man. Amazon, let's go to Amazon. Take a look at Amazon out here. Amazon's down $12. Amazon, right now, that volume is light, so that's not the end of the world in Amazon. But Amazon does look to me like 927, hasn't been tested yet. That wants to be tested. That is from June 9th. That's the number from June 9th. NDX, what was there was another big one inside the NDX. Let's see. That was bringing this baby south. Okay, so Google is bringing it south. Google's down $6. You get the Biogen is down $3. That's no big deal. Well, you get a bunch of Alexa. I see what's going on here. So, Alexa, that's another biotech. That's down $2.50. Skyworks is down $177. Let's look at Skyworks. Skyworks is an Apple supplier. So Skyworks has given it up. Now, this is a classic, too, this one here, Skyworks. What I mean by that is on June 9th, that was a monster down day inside the NDX. We went from 112 to 104. Skyworks went all the way down to 94. That was on the 29th of June. It made its way back all the way to 110, folks. Now, you're going into the downdraft, and you've given it up. The thing that's intriguing here, let me pull this up, is that the fast move in the NDX this afternoon, folks, made a really fast move. That move was made at basically 2 o'clock. Like the Qs went from 146.16, 30 minutes later, it's 145.11. You know, full point. Now, we get a little counter trend happening, but it doesn't look to me like it looked like the counter trend was over at 20 past. Right now, we're 37 past. So I expect what you're going to see is that the Qs want to go back into the 145.11, and right now we're at 145.52. Some of the higher volume stocks out, well, actually, let's go look at Google next, and then we'll hit Facebook. So Google, that's light volume. Google's going after it. It's lower swing, though. You're down $5.97. You're at 914. That's going after the 905 level. Facebook, yeah, that's down $1.67. That's staying at the highs. Facebook just looks like that 175 looks like it still wants to get tagged to the upside. Some of the higher volume stocks in this market, this will be a low volume market out here today too, is that you have Marvell up 22 cents, you have Oracle down 48, that's been getting hit. Wells Fargo is up $1. You have Citigroup up $1. You stay right there, folks. We'll be coming right back. Dow Industrials right now trading up 85. NASDAQ is up 6. S&Ps are up 5. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go take a look at Goldman Sachs. So Goldman is one of the movies inside the Dow Industrials out here today at 228. The number to keep your eye on in Goldman is, the top of this consolidation is the 230 level, folks. Each and every time it gets up to this level, it just seems to give it up. It spiked it on the 8th of August. You got to 235. It closed at 232 the next day, right below 230 once again, and it then went right down to 214. So you dropped basically 15 points in about a month. And the reason that you really want to watch Goldman is that it still looks, Goldman had rang the bell at 255. And when I talk about ringing the bell, that was a long time ago. It was in March of 2017. But bottom line, it rang that bell, been consolidating since then, and hasn't been able to catch a bid. So we'll see if that's going to make a difference going forward. But it's certainly making a difference inside the XLF. So if we take a look at the XLF, what you're going to see, XLF had a high out here of 25.59. You go down, we hit a low about 7 trading days ago at 23.79. That has volume on it. You bounce, you go higher. What we're doing right now is that you're coming right into the downdraft from the 10th of August, and you've done 36 million shares versus 71 million. Let's go to a Berkshire Hathaway, BRK, because Berkshire is the largest weighting structure inside the Dow, inside the XLF rather. Berkshire is going after a test of its high. Berkshire is up 149 today, 181.97 is the high. You're at 181.38. I expect it's going to go after it. J.P. Morgan. We take a look at J.P. Morgan. J.P. Morgan is up $1.50 today. You're at 93.12, and what that's going to be all about, of course, is that you have the Fed meeting that starts tomorrow with an announcement on Wednesday. Right now, your probability of the Fed going up when you look at the Fed fund futures rate is 2.1%. What did happen on Friday, folks, is that the probability that we would go up before June of 2018 went up pretty dramatically. On last week, the first time we got over the 50% mark was in May and June. What happened is that the CPI number came out. You went to a 50% chance on the 13th of December. So the next 3 meetings go like this. We have this Tuesday and Wednesday, then you have November 1st, then we have December 13th. December 13th right now, that number is running at 50.6. If we do take a look at your 10-year yield right now, your 10-year yield is 2.2. If we actually look at the structure behind it, the bonds, it looks to me like these babies are just about giving it up of going down. You know, the 10-year note, if you go back on the 26th of July, that 10-year note was 125.04. You went straight up, got up over the last swing point, which was 126.24. You run up to 127.28, and you're backing in. Today, that's dramatically lighter volume as we're backing in. In fact, let's go look at the TLT, because if you don't have the volumes on the futures, we can look at that TLT, and you're going to see the TLT is trading 126.04. You've done 4.7 million shares. You're breaking it, the small swing from last week that had 6.7 million shares, and you're going into 9.3 million shares. So bottom line is that you are backing into where we broke out from a little consolidation on the 17th of August, and you're doing that with dramatically lighter volume, which does bring up the aspect that, you know, it wants higher price once again. Let's go take a look at the yen for one of the tigers out here, JPY. So, excuse me, folks. The yen's trading at 111.49. There's an inverse correlation. Bottom line, yen gets weaker, gold gets weaker, and this yen, this can get up to 112.20 pretty easy. You know, 5 days, 7 days, we just went from 107.32. You're at 111. Let me just see if I do it this way. So let's see. Oh, interesting. So 111.78 is a 0.618 retracement from the last move down. That's something you want to keep your eye on, because there's a swing point there. What is that swing? That swings, the swing point is 112.20. It looks to me like I can go to 112.20. And what does happen is if you get over that 111.75, what that does is that, hey, you know, you get over the 0.618, guess what? You can go at 100% retracement, which would be the 114.49. If we get that, and I expect what you're going to see. You're going to see high volatility Wednesday when that Fed announcement comes out at 2 o'clock. What I don't expect is that they're going to basically raise rates. What you can expect is that there's going to be something inside the statement. Now, they're going to have a tough time. They love being data dependent. I mean, that's what the Fed does. And they're going to have a tough time being data dependent when you have the aspect of Harvey that hit Texas and Houston in an incredible way, and Irma that was hitting Florida and, you know, parts of the whole rest of the East Coast. There's data there that the Fed is not going to have, or that they have it and they just don't know how accurate that data actually is, and how much storm-related damage is inside of that data. Let's go take a look at the Walmart. Of course, Walmart is fighting it out with Amazon for all our houses. Excuse me, folks. Excuse me. Walmart got to a price point today of $81.12, and that looks like Walmart's going to give it up again here. The $80.47, that's the consolidation Walmart's been in. The bottom of that is 73. The top is 80. It looks like it's not going to handle it. The XLE Energy. What do we have with the energy market out here? Energy market, you're at 66.12. What I'd like to see is last week we had a high of 67. The low of that high is 66.35. I'd love to see that thing get tested. It looks to me like it's not going to get by that. And what's stopping that, by the way, is going all the way back to May 4th. May 4th, that was a big down day. 33 million shares. That supply line basically is stopping that from higher price. If we look at ExxonMobil, which is the largest weighting structure, that's up 3 cents today, light volume. Chevron, which is the second largest weighting structure, that's up 49 cents, trading 115.12. And that wants to test the 115.33. Hasn't done it yet, but I suspect we are going to get that test. That being said and done, bottom line, XLE also is showing some weakness out here. The NASDAQ, as we started, that thing is psycho out here today. NASDAQ bottom line is only down 5 points right now. We started the program. We were down at the, let's see, yeah, we were just about, we were at 59.76. It just banged in 13 points. It's only down 6 points right now. We'll see what kind of traction this can get as we get into the close out here today. The Dow Industrials right now are up 79. NASDAQ's up 9. S&P's up 5.5. Stay right there, folks. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrials right now up by 71. You get the NASDAQ up 8. S&Ps are up 5. And if we go take a look at the, Microsoft. Microsoft made another new high out here today. Microsoft, folks, traded up to a price point of $75.97. You're at $75.26 right now. 74.96 is the number to keep your eye on. I don't think it's going to get down to that level. But if, in fact, we did, you get a few sellers up at these higher highs. Microsoft itself, that was at 12.20 that it made that high. slightly came down, and then at the 2 o'clock mark when the NASDAQ did take a hit on the way down, this also took a hit. Amazon, AMZN, Amazon went right down. Actually, I want to go to NVIDIA, NVDA. The reason I want to go to NVIDIA is that, if you remember on June 9th, folks, inside the NASDAQ, that was a vicious day. If we go take a look at this, I'll just show you that the Qs had done, so the NDX. What we had done is this, is June 9th, we went from a price point, and this was fast and furious, from 143.90 to 138. And we did that with 109 million shares. So your benchmark on the Qs is this 143.90. Now, we've been over that, and you got back over it on the 19th of July. That being said, this has been hard to, it's been having a hard time holding higher price up here. NVIDIA was one of the companies that came down fast and furious and took quite a few stocks down with it. And that's when NVIDIA actually had, come out with a couple of good numbers, all of the above. NVIDIA went from 168 to 142 in about a heartbeat. It took, all of basically three months to get back topside. Gets up there, does 191 today. Right now you're at 197, 187. You stay right there, folks. We'll be coming back with some numbers after the close today. Dow Industrials right now up 68. NASDAQ up 8. S&P's up 4.5. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester. Hey, Marty, what's going on?
Hi, Mr. O'Brien. How are you?
I'm doing great. How you been, man?
Not bad. You guys, over the time and with a few of your courses and seminars, you taught me how to fish.
That's a beautiful thing, brother.
Yeah, it's true. And so what happens is I still listen all the time, and to not only you, but some of the others.
Sure.
To, get an idea where the fish might be biting. As far as your services, they're a bargain. When you compare them to a certain prominent man with real estate courses at $35,000 and no contact with the lecturers afterwards at all, and you think of what you guys do for a few hundred, and you can get access and ask questions forever, it's a great deal.
No, we appreciate the growling problem with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on, grow. Hope everyone's having a great day, safe day. Let's make it a great week, folks. Create new agreements based on respect and love. Take the responsibility to make new agreements with those you love. If an agreement doesn't work, change the agreement and create a new one. Use your imagination to explore all the possibilities. Market-wise, let's take a look at it out here. We had the Dow Industrials up 63, all-time high, 22,331. NASDAQ up 6, 64.54. S&P's up 4.5, 25.02. Gold contract down $13.90, trading at $13.11. I expect what you're going to see here. Gold broke out on the 28th of August, folks. That breakout area was the 1297, 1305 area. It's coming back to that area with dramatically lighter volume. You get the platinum market trading out here at a price point of $960. That was down $8.50. Silver down 44 cents, $17.26. Platinum was up $2 at 2 cents rather, at $2.96 a pound. Light sweet crude flat, $49.91. Notes, the 10-year note down 8 ticks, 126.02. 30-year bond off 21 at 154.12. If we go over and we take a look at this note, what you're going to see out here, folks, the 10-year note, TYZ. We'll take a look at the 10-year note first. What you have with the 10-year, we did 750,000 contracts. That is anemic volume, folks. And that's what you're looking for if you think bonds can go higher. Bonds normally can do 1.2 real easy. Bottom line, you get under a swing of 1.4. You did 1.2. I expect this number right in this is going to hold. And we have the Fed meeting tomorrow and an announcement on Tuesday. We get over and we take a look at the Wednesday, rather. We go over and we look at the 30-year bond. 30-year bond goes down to 154.04. The 30-year did reject lower price. Let's see if we closed. Look at right. We closed one tick underneath it. 154.12 was the number to keep your eye on. 280,000 were at 154.11. Now, what's intriguing about both the notes and bonds, folks, just at the close here, you had the numbers come out from the Treasury as to who owns what in China, increased its holdings of U.S. Treasury the most in almost a year. China's holdings of U.S. bonds, notes, bills rose for the sixth straight month, and it rose, so check this out, by a dollar amount of 1.17 trillion in July. That's an increase of 19.5 billion from the month earlier. According to the Treasury Department, released literally just at 4 o'clock. Japan owned 1.11 trillion, up from 22.3 billion from June, marking the biggest gain in 4 years. So bottom line, folks, supply versus demand, you're still seeing it in the bond market. That's why these rates are continuing to be low. And if you take a look at the structure when we go along, inside different countries, you're going to see why. Bottom line is that, you know, if you go to Japan, bottom line, on a 10-year, they're not paying anything. They're not negative, but they're not paying you anything either. You go to Australia, they're paying 2.7%. Let me see if I can get... well, Hong Kong, the yield is 1.3. Oh, here it is. So China's 3.6. On a 10-year, but guess what? China, they're taking their money. That's in their yuan, but they're taking their money and putting it in the U.S. at 2.2 on the 10-year. On the 30-year, the 30-year right now is at 2.8. Bottom line is that what you're going to see is that you're going to see the aspect that what you do have is that there's more demand than there is supply. We go take a look at the King Dollar. What do you have with King Dollar out here? King Dollar right now trading at a price point of 91.815. That's up 162 ticks. You did 18,000 contracts. Now, King Dollar, that's light volume. There's no doubt about that. King Dollar's had a tough time holding any type of price all the way from the April 10th time frame. We've gone from 100.950. You hit a low last week out here, actually the week before, the 8th, at 90.795. Bottom line, we'll see whether it can catch the bid. You know, a normal bounce would bring you further than the swing point I'm talking about, which is 93.840. But I do expect you are going to get the good old dollar index to bounce a little bit higher. That's on a short-term basis. A longer-term basis, folks, good old King Dollar looks like it's going to be running down into the 88 area. So that's quite a move inside King Dollar. Silver market was off 2.5% today. Silver, highly volatile, always highly volatile. Silver came down 44 cents. You did 83,000 contracts. You're coming into the breakout area. The bottom of that breakout area is 1710. We hit 1711. And if we go to the SLV, we take a look at the SLV and see how that's setting up. The SLV, that came down on 11 million shares. Oh, it's going to be tough. That versus 11 million of the breakout. So it's 11.08 on the breakout. That low there was 1621. We came to 1612 today. 11.92, I see. Okay. No, 11.92 is the high of 1621. Yeah, so you come down with 400,000 lighter, about 350, but that's a close one. Yeah, that is saying that the silver contract will retest the lows of today also, which is the $16.12 number. Some of the higher volume stocks that you had out here today in this market, by the way, was a low volume market out here today. We had the Bank of America up 32 cents. Advanced Micro was up 56. Apple gave back $1.21. You had Wells Fargo up $1. We had Citigroup up $1.56. They're all waiting, of course, for the Fed statement on Tuesday to see exactly where we are going to be with these rate structures. You stay right there, folks. We got our man, Mr. Chris Gaffney, coming in up next, the president of Everbank World Markets. Our phone number is 877-927-6648. Dow up 63, NASDAQ up 6, S&P's up 5.5. We're going to break back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials finished up 63, had the Nasdaq up 6, S&Ps were up 5. And as you come over to our website at TFNN, folks, you're going to see right on the right-hand side the 3-year market-safe emerging currency CD. Let's go over to our man, Mr. Chris Gaffney, the president of EverBank World Markets. And, of course, you've heard Chris here many times. We're always lucky to get him on, particularly when the Fed is talking. This product, folks, okay, all their market-safe CD products are pretty phenomenal. This one in particular is pretty cool because why? It's a 3-year CD. You have 5 separate currencies. You have a 7 time leverage factor, and as all their market-safe CDs, folks, your principal is 100% protected. Chris Gaffney, welcome back to TFNN.
Thanks, Tom. It's always great to be here.
I'm telling you, I love your products, man. Your products are just phenomenal.
And this one stands out, and you talk about the 100% protection, which is super. But that leverage factor is really, that's in talking to clients that are calling into the desk. I just talked to a listener this morning of TFNN, and she was talking about that 7 times leverage factor, and when we're designing market-safe products, that's what we're looking for. We're looking for a product where an investor can take advantage of a big potential upside with no downside risk. And that's what makes the market-safe product really unique, is that, you can get involved in a market that can be volatile, and you have good upside potential, but no downside risk, and your principal's protected.
And what happens here, which is so cool too, folks, it's not like you have to be out there trading. This is a, it's a CD type of product, okay? It's IRA eligible, it's FDIC insured. Of course, what ends up happening. So talk to me about the different currencies. You have the Turkish lira, right? Indonesia rupee, Indian rupee, Chinese renminbi, and then Brazilian real, right?
That's a mouthful. That's a mouthful.
It is. I know, man. I know.
They're emerging market currencies, and they're currencies that should benefit from global growth.
Okay.
The emerging markets, as the globe starts to, the engine of global growth starts kicking in again.
Sure.
These emerging markets are emerging market currencies should benefit from that growth, and we're seeing a little bit of that. All of these currencies that are involved in this CD are up versus the U.S. dollar year to date. Some of them not dramatic, but they're starting to move in the right direction. And emerging markets have been sliding versus the U.S. dollar. U.S. dollar has been king over the past 5 years. Everyone wanted to be back into the U.S. dollar, but we've seen that reverse this year. And we believe, and I personally believe, that it's the start of a new trend. And in fact, the dollar, in my belief, will continue to slide. This CD is a way for investors to take advantage if the dollar starts moving down. And even a small uptick on the currencies can, with that 7 times leverage factor, can turn into a good return. And basically what we do is we take and measure the value of the currencies versus the U.S. dollar at the beginning of the CD.
Okay.
Then we're going to measure it again at the end of the 3-year term.
Yes.
Whatever that percentage gain is, the 5 currencies are equally weighted. So we take and average the percentage gain of those 5 currencies over that 3-year period. It's point to point. And then we take and multiply that by 7. So if let's say the currencies go up 2% per year. So in over 3 years, you see the currencies up 6%. The CD is going to return 6 times 7, 42%. And on the flip side, if the currencies slide, if the dollar continues to strengthen,
sure.
You're guaranteed to get your principal back.
It's pretty amazing. And, you know, a 3-year product, you know, right now, the only cost, folks, that you'd be giving up is the opportunity cost that if you're in that CD market as to what a 3-year CD would pay. And I don't know that, but I suspect it's only a couple percent, right? I mean,
right. It's not a whole lot, and that is the opportunity cost of this CD. Minimum's only $1,500, and it's really a great product for an IRA in that, you know, especially with an IRA, you want to make sure return of principal is as important as return on principal, and certainly with this product, it's FDIC insured. You're guaranteed to get your principal back. Great way, I think, for investors to you know, stick their toe into what can be a real volatile market, the emerging market
sure.
currencies, and do it risk-free.
You know what's pretty cool, too, Chris, right? And folks, you know, depending where you are in your investment cycle, you know, if you happen to be, you know, the 25-year-old just getting out of college, you know, 30, 40, 60, the education value in this is pretty cool, because what I've found is that over the course of years, currencies mean something. You know, we're in a one-world economy now, so it's pretty cool. You know, you're into this and you start watching these currencies, and it's not like you're going to be losing money or making money every day, but you really get to understand what drives currencies.
Well, and when you see, you know, China's retail sales were up 11%, all of a sudden you think, hey, I've got an investment in China. You know, I've got some exposure to the Chinese currency, and you know that's got to be good for the Chinese currency, or you know, yeah, and you start paying more attention. And you know, here at Everbank, we are all about diversification. We preach that investors should add alternative assets, the precious metals, foreign currencies, other non-correlated assets to their portfolio. So it's not all about just being in stocks and bonds. You need other asset classes in your portfolio also, and this is I believe, a great way to add those emerging market currencies to a portfolio, giving you a little bit of diversification and with no downside risk again.
Yes. And folks, so the way that you open this, okay, it's $1,500 to open. You know, you can put in $10,000, you can put $100,000. It was $1,500 to open. You can give them a call at 855-750-4051. Now, the cool thing, folks, once you give them a call and you open up the account, they have many other products that are phenomenal. It's very easy to do. You can come over to our website at TFNN. You hit the banner. You can go over them right then and there. Bottom line, what you're going to see inside that, just a regular checking account. Okay, they pay. Well, we got like a minute, Chris. Can you just talk about your policy inside the checking account in general?
Sure. We're known. We're an online bank. We were founded as an online bank. We do have some locations in Florida, some branch locations in Florida, but you know, we've got a yield pledge. So we're committed to keeping our yields on our checking account within the top 5 of our competitors. So 5%. So we're going to stay within the top yielding checking account, and we constantly monitor that and make sure that our yield pledge checking account is among the top yielding checking account in the country.
It doesn't get any better than that. Right. And so what happens, folks, the bottom line is that, you know, whether you're going to get a market safe CD, whether you're going to open a checking account, just move the money over there, because then you're going to be able to take advantage of that. You're going to be taking advantage of, they have gold, silver, platinum, palladium. They get a whole markets overview. And guess what? They have mortgages too, folks. That's a beautiful thing. Chris, it's always a pleasure. I didn't get to talk to you about the Fed. We're going to see where the Fed's going to go, right?
On Wednesday.
Sad.
On Wednesday. It's a big day.
It is a big day. Have a great one, Chris. Have a safe one. Really appreciate it.
All right.
You stay right there, folks. We'll come right back.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member, FDIC.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com. TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go take a look at the NDX 100 out here. So NDX was the failed on price, failed on volume, NQZ7. And intraday, we got up to 6,018. You closed at 59.87. Anything that was under the July 27th in the NDX 100 case, anything under 6,002 is a failure on price and volume. Volume-wise, what we did out here, we did volume of 1.8 billion shares. Now, what we did do, and this is why this had to get actually up and over the highs of Friday. On Friday, folks, we had volume. Now, it was quad-witching, but guess what? You had volume. You did 2.8 billion shares. So that baby, in order to get a shot of getting lower price, had to get over that area, and we did get over it, and we get over it by only 3 points. The high on Friday was 6,015. We got to 6,018. And, this consolidation is still in place. Now, what you do have is this. Your next benchmark on this is dramatically lower because the larger benchmark inside the NDX 100 is 59.08. That was where we went fast and furious inside the NASDAQ on the way down. It was only the NASDAQ that went down that day, by the way, too. We went from 59.08. We went down 190 points to 57.02. That was fast, furious. Ended up going to a lower low of 55.68 and then climbed all the way back topside. If we take a look at the Qs, same correlation inside the Qs. What you're going to see there, the Qs right now are at 145, 55. The Qs would have to get back inside 143.90. That would be the number in the Qs. What we did do, the Qs got to the 146.37 today, which was over the benchmark on the 27th. The 27th is 145.96. We did 80 million. You did 24 million versus the 80. You failed on price. You failed on volume. That is setting up that it wants to get down into the 140 area. Inside the NDX 100, the strength versus the weakness, and you had some strength inside the NDX, by the way, today too. NetEase was up 8.2%, 22 bucks, big number. NVIDIA up 4%, $7.44. And it's surprising that the NDX actually did stay in the red with the chip stocks moving. The chip stocks have taken the NDX as well as the NASDAQ composite to new highs, and they didn't stop them today, but they stopped them from going to, stopped them from holding price. Lam Research was also up 2.4%. Taken away from it on the way down, you had Mattel. Mattel's having a problem. That was down 6%. You had Cerner Corporation off 3%. Tractor Supply was down 2.8%, and Discovery Communications was down 2.8%. If we go over and we take a look at the FANG stocks, Amazon was down 12 bucks. Slight, Amazon's going to need a higher volume to get to lower price. I do expect that low that was established out here on June 9th to get tested, which is 927. Google also was moving to lower price out here. Google was down 529. Now this is approaching the lower end of its consolidation, so Google can get a little dangerous here. That number is 894. We go take a look at, we did this on the 3 o'clock hour. This is pretty intense, folks. You want to see something that's CMG. Chipotle, folks, is a confirmed ABC structure down on a monthly basis. Now, check this out. When you bring Chipotle back, this equity, let's bring it all the way back to 2008. So 2008, Chipotle's a $36 stock at the end of the crash, right? Let's just see, make sure that's the number. Yeah, that's the number. So, end of the crash, Chipotle is at $36. It does its first leg from 2008 going up to 2012. It goes to $442. That's without a retracement, by the way. Without a retracement, 36 to 442. So what's that? That's a 12 bagger, 12 times the 36 approximately. What does it do? It retraces from 442. It gets down to 233. Then it doesn't stop again from 233 going up, establishing a high 2 years ago, August of 2015. That high, 758. Now, we know Chipotle, they've had problems with their food, a couple of food scares, all of the above, losing a lot of customers. We are at 301. The problem with Chipotle is this. When Chipotle came down in July, it broke a B point and broke it with volume. The ABC structure down on Chipotle, this is the leader on the way down today also, 301. Chipotle is a confirmed ABC structure down, folks, to 93 bucks. So this is going to get pretty intense. It should get some support at 233. The reason 233 comes up is that is a high volume low that was established in October of 2012. But bottom line, this looks to me like it has big trouble in paradise here. They have 64,000 employees, so they certainly are employing a lot of people. Their growth rate, 2013, they had done $3.2 billion. 2017, $4.5 billion. Bottom line is that they have a 3-year growth rate running at 6.69%. Now, that certainly is not a large growth rate for the type of number that we're talking. This is, if you're a fundamentalist, their PE is 58. So you are spending $58 for $1 of earnings. That is pretty intense, folks. And let me just see some. Well, yeah, they're making money. They're also, okay, so this is going to get interesting to see whether they can do this. So picture this. In 2016, that's where the scares were, right? And they definitely had a couple in 2017. But in 2016, well, let's start with 2015. 2015, they made $15.43 to the bottom line per share. Big money, right? Good money. 2016, they made 77 cents. They plan on making $7.63 this year. And, you know, they're working their way there. The first quarter, they made $1.60. Second quarter, $2.32. Now, Third and fourth quarter, however, they're saying that it's going to be lighter. They're saying $1.82 and $1.86. We'll see where it shakes out, but that ABC structure on the way up came about because inside the NDX 100, that was the largest mover on the way down out here today. You had, let's see, where are we at? No, this is interesting. Now, actually, by the end of the day, Amazon was the largest mover on the way down. Amazon was down at $12. So Amazon was the largest mover on the way down out here today. Inside, let's see, the next one's out here. So you had Amazon putting 12. That was down $12. Google was down 5.5. You had Biogen down 3. Alexa Pharmaceutical was down 3. Putting juice into it on the way up, this is what you had. You had NetEase up 20, putting 22 positive points. Priceline putting 10. Intuitive Surgical putting 8. NVIDIA putting 7. Tesla putting 5. Lam Research putting 4. Bottom line, inside the NDX 100, folks, that's where the bulls and bears are lining up, and that's where those big fights are lining up. And thus far, the NDX has failed on price and volume. S&P, though, hasn't. S&P at 2502. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. So we have the Federal Reserve. They're going to start meeting tomorrow. They will come out with a statement on Wednesday, folks, at 2 o'clock. Now, the market certainly is not expecting that the short-term rates are going to go up. Right now, the Fed fund futures are only 2% chance. There's 2% chance in November. December does go up to 50% chance. Now, that being said, you know, on the update at 3 o'clock, rather, we were talking about the aspect of the amount of buying inside our bond market by the Chinese and the Japanese. These are big numbers, folks, okay? So China increased its holdings of U.S. Treasuries to the most in almost a year, an indication that government policies help curb capital flight. China's holdings of U.S. bonds, notes, and bills rose for the 6th straight month to 1.17 trillion in July. Now, that's an increase of 19.5 billion from a month earlier. I think that's pretty amazing. Think about this for a second. There's 21 trading days average in a month. That means that they're buying approximately 900 million of, whether it's Treasury bonds, and the bonds, folks, what a bond is anything over 10 years, that's a bond. A note is 10 years. A bill is a year or less. Those are all our instruments, though. Bottom line, they're out there every day. So that's the Chinese, right? Japanese, they own 1.11 trillion. So they own 0.5. So they own 500 million less than the Chinese. They bought an additional 22.3 billion in June. So they bought actually more than the Chinese bought. So they're buying approximately 1 billion a day. Now, when you take a look at this, okay, these two countries account for more than 1/3 of foreign ownership of our treasuries. Which gained, so we have, okay, so this is, which gained 78.7 billion. Right now, we get 6.25 trillion outstanding. That's what we have. That's a big number, isn't it? 6.25 trillion outstanding as of July. Chinese foreign currency exchange reserves increased for the 7th month in August to 3.09 trillion. China's capital outflows have eased amid tighter controls, helping steady the currency, which has climbed about 6% this year after weakening 7% in 2017. The country's central bank said effectively removing a reserve requirement that may slow the pace of the yuan appreciation. Belgium, ownership of treasury is often seen as a home for the Chinese custodial accounts. Look at this, oh my God, rose to 99.4 billion in July from 98. So they're buying through there also. We take a look at the, let's see, the Treasury report, which also contains data on international capital flows, shows a net inflow into the U.S. long-term treasuries of 1.3 billion from 34.4 billion in June. It showed a total cross-border outflow, including short-term securities and swaps, of 7.3 billion, following the inflows of 5.9 billion the prior month. Bottom line, you can see when you do supply versus demand, folks, and folks wonder why that this bond market, note market, continues to come back. That's what it's about. It's about supply versus demand. And if we take a look at this bond market out here today, it looks to me like this bond market once again wants to go to higher price. Let's go to Rich in Portland. Hey, Rich, what's going on?
Hey, thanks for taking my call, Tom.
Sure. Thanks for calling. Thanks for holding, man.
Based on the pullback in the price of gold the last few days, do you see an entry here yet for the GDX?
So let's take a look. The GDX is the Market Vectors Gold Miners Trust. The low out here for the year has been $18.58. The high is $28.56. This is certainly pulling back to the breakout area. It's pulling back with light volume. We did 48 million shares today. It's going into 83 million. I would give this a little bit longer, though. I like the setup. I definitely, if you want to go a third, I do like the setup. You know, you're at 23.73. This can get down to 23.06. You know.
Yeah, that's what I was wondering, if it would get down to the 23 area at all.
Yeah, it can. It can for sure. Let's take a. I'm sorry. Go ahead.
One thing that I was concerned about was ABX, which is one of the top holdings in the GDX. ABX is still having that problem with that acacia in Africa.
Yep.
Is that going to hurt the GDX?
So you get Newmont, folks. You get Barrick Gold. Barrick Gold is the largest gold company in the world. They are having a trouble with basically one of their subsidiaries. That being said, I like how this thing's trading. I mean, you pull back with 8 million shares, you're going into 18 million. You know, ABX can get down to 1659 or at 1692. What the difference is, what we don't have in ABX is that, like, when that fired up to 1835 last week, 2 weeks ago, you only had 11 million shares, and you were coming down to 51 million. That's where it got croaked on the 25th of April. So that's going to have to build more cars. Let's go to the Newmont, which is the second largest weighting inside there. Newmont's strong. But see, Newmont wants to pull back too. Newmont is 37. This can get the Newmont's 37.78. This can get the 36.60. I would just sit there and wait. I like how this pullback is happening. I can tell you that. We know that the gold and silver market is highly volatile, folks, and it's got to prove itself. What we did happen out here today, Rich, is that this silver pullback was a bit too much. That's like silver. We came back 44 cents. You did 83,000 contracts. It's like, okay. So is like a silver going to go to $17? Yeah, it probably can. It's only 20 cents away. So
yeah, that was some conviction pullback.
It was, and that's what silver likes to do. Well, let's take a look at a couple of silver stocks.
Like AG, First Majestic.
Okay, so this is a highly volatile stock, First Majestic, and that's a good setup. That's not a bad setup. See, I like what happened here. First Majestic, you're down 16 cents, 3.4 million shares, but yet you're going into 4.9. But First Majestic can also go back to 650, and you're at 680. I know it doesn't seem a lot, folks, but when you're talking $6 stocks, percentage-wise, it is a lot. And
that's right.
Yeah, and what does happen is that we want to see a rejection of price. I really like what the gold market did. The wild card here is I still expect we're going to see that King Dollar try to get to that swing point. And King Dollar's been a mess, folks, and it's been a mess since January 3rd. We went from 103 down to, 90 or 89? Yeah, down to 90. And we'll see, but if King Dollar, does do that bounce to 93,840, man, that's saying that, that gold contract can go lower. I think what we have, Rich, is that even with the gold contract lower, the equities are stronger than the contract itself this time.
Okay, Tom.
Cooking, brother.
I appreciate it.
Have a great one. Have a safe one. You too, man. Stay right there, folks. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. September 30th, Boston, folks. I'm coming up to Boston. I'm going to do a live workshop. Now, this workshop, folks, is sponsored by Nadex. It's a free workshop. It's going to be a great educational workshop. It is at the Boston Marriott, which is in Burlington, Massachusetts. September 30th, the workshop is going to start at 7:45 in the morning. 7:45 to 8:30, you get a continental breakfast. You're also going to get a copy of my book, The Art of Timing the Trade, How Price and Volume Move Markets. We're going to have welcome remarks by our man, Mr. Dan Cook from Nadex from 8:30 to 8:45. My son Tommy's going to be talking about, from 8:45 to 9 o'clock, going to be talking about the spreads and the binaries on the Nadex platform. I'm going to be teaching from 8:45 to, from 9 to 10:30. And I'm going to be talking about quality volume, cause and effect, the ABC structures, the swing points, and testing. Testing, folks, and that's what we've been doing on a continual basis here. You actually had the NDX 100 fail on Friday. You had it fail today. If you want to understand that whole testing procedure upside down, check it out September 30th. Then we're going to have a coffee break from 10:30 to 10:45. Our man, Mr. Darryl Martin's going to be coming up for an additional hour and a half from 10:45 to 12:15. And then Darryl and I will be taking questions from 12:15 to 1. And, of course, we're going to be growling a problem with all you Tigers and Tigresses. So check it out on the front page of TFNN. Going to be a great workshop. Can't wait to get up there and see all you Tigers and Tigresses in the Boston area. We take a look at the S&P. Bottom line, S&P is at a higher price, light volume today, but guess what? Higher price, you can go higher. We traded to, the cash traded to 25.08. It closed out at 25.03. The cash would have to get back under this 24.90 to get into lower prices. NDX 100, different ball game. This, of course, is the highly volatile index. This has been in a consolidation for quite a while, but this is the index that did take everything up, folks. And that's the second day in a row that you failed on price, failed on volume. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need, folks, is right inside you. Have a blast with it. Look forward to speaking it right back here tomorrow morning, 9 o'clock. Go get them, folks.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.